Decentralizing capital. The Arrow Act's regional catalyst. The Arrow Act is strategically redirecting investment and development pressure from Metro Manila towards emerging regional growth centers. This legislative framework, designed to accelerate rural development and infrastructure outside the national capital region, is creating a fundamental shift in the Philippine real estate paradigm.
The acute congestion and soaring asset prices in Metro Manila have long necessitated a policy-driven solution to foster balanced national growth. The Act serves as that catalyst, unlocking latent value in secondary and tertiary cities by incentivizing commercial and residential development through streamlined permits and targeted fiscal benefits.
This deliberate decentralization is not merely dispersing economic activity but is actively constructing new competitive investment nodes, with initial indicators showing pronounced capital flow into areas like San Carlos City, Negros Occidental.
Legislative leverage and historical imbalance. The Act directly addresses decades of centralization by making regional development financially and logistically compelling. The Philippine economy has historically been overwhelmingly concentrated in Metro Manila, creating a significant developmental disparity and leaving regional centers undercapitalized.
The Arrow Act's provisions, which include fast-tracked processing for projects outside the capital and potential tax incentives, are engineered to recalibrate this imbalance. This policy intervention lowers the traditional barriers to entry and operational friction for developers and investors, thereby altering the risk-reward calculus for regional projects.
The status quo of hypercentralization is being systematically challenged, with the Act providing the necessary leverage to pivot private sector focus towards untapped markets with strong fundamentals.
Mechanics of a market shift. Capital follows streamlined pathways, with brokers and agents in cities like San Carlos becoming critical intermediaries for newly mobile investment. The operational mechanics of this shift hinge on the enhanced viability of projects in regional hotspots.
By reducing bureaucratic timelines and uncertainty, the Act improves project internal rates of return (IRR) and accelerates capital deployment cycles. This activates local ecosystems, where entities like Segurate Real Estate transition from serving a purely local clientele to facilitating inbound investment from national and international sources seeking diversification and higher yield potential.
The value proposition of cities offering lower land acquisition costs to emerging infrastructure and growing local economies becomes materially amplified. Consequently, the traditional real estate agent's role evolves into that of a strategic gateway, requiring deep hyperlocal knowledge paired with an understanding of macro investment drivers.
Verdict. Sustained rebalancing ahead. The Arrow Act has initiated a durable, multi-year reallocation of real estate capital, with first-mover advantages now crystallizing in pioneer cities. The strategic verdict is that this legislative move will sustain a long-term rebalancing of the Philippine property landscape.
The initial influx of capital into early adopter regions will catalyze further ancillary development, improving livability and attracting more talent and business, creating a virtuous cycle. However, future risks include potential speculative overheating in the most accessible markets and the imperative for local governments to manage growth through complementary infrastructure and zoning.
The opportunity lies in a more resilient, distributed national economy. The next strategic steps involve identifying secondary cities with the government's capacity and spatial plans to absorb this growth sustainably, ensuring the decentralization drive translates into broad-based regional prosperity rather than isolated bubbles.